Morning. Welcome. Today is July 10th of 2024. It's a Wednesday. And today we have Federal Jerome Powell testifying in less than an hour. And we have the 10-year bond auction. So we have speeches today. However, tomorrow it's a big day. Tomorrow we have core CPI and we have unemployment claims tomorrow. Tomorrow morning before our call, we have news. We have CPI, which is Consumer Price Index. Consumer Price Index is a very important news event because it ties in with the Fed rate. Okay, Consumer Price Index, that's measuring the inflation. Okay, the change in the price of goods and services purchased by consumers. It's released on a monthly basis, about 16 days after the month ends. And this is among the few non-seasonally adjusted numbers reported on the calendar. And why do traders care? Traders care because consumer prices account for a majority of overall inflation. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for their inflation containment mandate. Okay, inflation ties in the Fed rate. So you guys can go forexfactory.com and look at the numbers and read more about the details. And also gives you additional resources to check out. The previous numbers were 3.3% inflation. It raised by 3.3 back in June 12th. Now, currently, that's where it's at. Now, tomorrow they will release the numbers. So the higher the interest rate, the more money they're going to be printing. Okay, they're going to turn on the money machine. They're going to start printing more money, and the dollar is going to lose more value. Okay, so because they're printing so much of it. They print trillions of dollars on a daily basis. You guys realize that the Federal Reserve, they print out trillions upon trillions of dollars on a daily basis. So because they need it to loan it out to banks, for mortgages, for student loans, credit card. They're printing so much money. We don't need all this cash. They're printing so much of it. I'm actually going to show you guys the debt clock, the U.S. debt clock, in case you guys didn't know. Let's see here. This is real time. USDebtClock.org. U.S. national debt is currently at $34 trillion. Dollars. Dinero. Look at this, guys. This is real numbers. Okay, in case you guys didn't know. Debt per citizen, 103,000. Look, guys, this is real numbers. U.S. total debt, 101 trillion. Wow. And this is the savings per family, $7,325. Per family, they save less than $10,000. What else? Student loan debt. Where is it? Student loan debt. Is that even a trillion? 1 trillion is just a lot. It's a lot of numbers. Okay, but this is real time. Median income, 39,000. Median new home, 409,000 to buy a home nowadays. The average is 409,000. Average new car, 51,000. So you guys can go to usdebtclock.org and check out these numbers. Let's see. US millionaires. How many millionaires? 23 million millionaires in the US right now, which is good. Top 1% in wealth, 18 million, right? Back in the days, there was only 50,000 millionaires. But now over the years, it has grown to 23 million millionaires. So every single one of you guys had the opportunity to become a millionaire nowadays. It's so simple because we have access to this information, right? Now that we know what to do, okay, all we gotta do is create a game plan and start executing. And yes, it's gonna take time, but yo, there's 23 million millionaires and it keeps growing every single day. It just updated. It went from 171 to 172. So 1 millionaire was created today. Just now. The number just went up by 1 point. I just saw it. You see? This is real numbers, guys. Trying to see the interest rate here. Interest per adult, right there, 17,000. US total interest paid, 4 trillion. Bank interest paid, 153 million. Credit card debt, 1 trillion. Let me ask you guys a question. Is a dollar backed by gold? Yes or no? Let me know in the chat. Is a dollar backed by gold? Yes or no? No, right? The dollar is not backed, it's not backed by gold anymore. You know why? Because ever since they released the gold standard, President Nixon, he signed off the gold standard, so it's not backed by gold anymore. You know what's backed by now? It's backed by the war. They fund the wars. Look at that. 905 million. Actually $905 trillion backed by the war. That's where all our money, tax money goes to, is to wars. That's crazy. You know? So this is real life stuff, man. Like, but yeah, I just want to show you guys this. This is a usdebtclock.org. For you guys to, look at this and just be aware of it. Look at the numbers. Because it all ties in. Esto es los números del deudo de los Estados Unidos. Cuánto dinero debemos y también otra información sobre cuánto dinero la familia, ahorran. So, en casa, en préstamos, deuda, yeah. And esto es like números real. So, pueden mirar cuánto debemos y, la deuda de crédito, de casa, de carro, um, you know, eso es un número real que puedes mirar a usdebtclock.org. O-R-G. Now, guys, let's go ahead and get started with this. But yeah, we have CPI Thursday, tomorrow, and we have unemployment claims. So, let's do some chart work. Go to Impulse. What up, Cisco? Haven't seen you in a minute, bro. You probably at the gym right now, right? I bet you $10 he's at the gym. All right, so see, I told you guys at the gym. We just finished up. All right, guys. So we're looking at impulse. All right, we're looking at gold. Let's see here. Now, are we experiencing an uptrend, downtrend, consolidation? What's the market face right now on gold? We're looking at the 4-hour. Are we looking at an uptrend, downtrend, or consolidation? Let me know in the chat. All right, let me know in the chat. Higher high, uptrend, yep. Yeah, we're looking at uptrend. We are currently in an uptrend. I don't care what happened back here. We just broke structure. It's creating higher highs, higher lows, higher highs, higher lows. It failed to create a lower low here. Start creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So price is currently here at 2380. I'm focusing where price is at. And it broke above this lower high here and this lower high. So right now we're experiencing an uptrend. And plus, it's giving me buying signs. Everything is blue. Looking at the 4-hour, it's giving me a blue micro trend arrow. Blue strength arrow, blue trend arrow. That indicates that right now we're experiencing an uptrend. That's why I like using impulse, because it gives me these signals, these confirmations to help my trading analysis. All right, now that I know that it's blue and it's on an uptrend, we'll go to the 1-hour, right? And we're going to mark up our support and resistance zones. Okay. So we're
Johnson on YouTube that knows everything.
Let's make sure everybody's muted here. Please mute yourself when you come in. So yeah, we're going to look at the 1-hour and look at support and resistance. Okay. We're going to go over the playbook, the 8-step confirmation checklist that I posted in the chat. All right. Let's see here. So the first step was looking at market direction, the 4-hour. Why does it keep doing this? I'm pause you guys. Okay, I'm gonna take my horizontal line, and my nearest resistance is up here around 2390, which is a key level. 2390, 100. That is a resistance because price resisted, it failed to create a higher high, and instead it pushed price down. It failed to break above. Instead, it pushed price down. So that created a resistance. All right. I'm going to take my rectangle and I'm going to draw a line above my resistance. Let me actually add a chart saved here. Let me load this one up. Boom. This was my markup from yesterday. It hit TP3. It hit my stop loss and profits. But look, this was a move that we caught yesterday. Who caught the buy yesterday? Let me know in the chat. Who caught the buy yesterday? Right? It hit my first entry, hit my stop loss, but now I entered this again. And price broke above my hourly zone, 2355 area, It was an entry, but it was in profits. This was an intraday trade. So this was a move that we called out yesterday. For those that were on my call, we would have been in profits. But let's go ahead. Let me actually delete this here. 2350 was actually the entry. Instead, I set up as a stop loss, but that's okay. Once I saw this, I knew this was a liquidity sweep because it liquidated. It liquidated this low here. Okay. Liquidated this low, boom, and then reverse to the upside. And plus, it's giving me this blue microtrend arrow. That's a good sign for a buy. This microtrend arrow will pop up automatically. It's a artificial intelligence, part of the scanner that will pop up, and that will determine, okay, it's gonna move up. Its price momentum is to the upside. So that even gives me more confidence to enter the buy because it gave me that blue microtrend arrow. Okay. So I'm gonna go ahead and erase all of this. I already took a picture of this. So that way I can save it and I can backtest it. But we're gonna do these markups again. Now that we know the price direction, go to the 1 hour and draw my resistance again, 2390. And then take my rectangle. The width of my rectangle is 20 pips, so $1 above, 23.91. $1 below, 23.89. Above and below my key level. My key level is 23.90 because every $5 is a key level. So 23.90, 23.85, 23.80 is a key level. Okay, and then I draw my rectangle, my zone, total 20 pips. So 23.91 and 23.89. Color this gray. So I have my resistance at the 1 hour, and then I'm going to look for my support. Where is my support? This is a strong support here, right? It has at least 2 to 3 touches. So I'm going to take my horizontal line, draw my support level here, 23.55. Boom. I'm going to take my rectangle, draw my zone of interest. 22.56 and 23.50. 23.54. Boom. So we have Federal Jerome Powell speaking in less than an hour. We'll see how price will react. We just had New York open in about 5 minutes ago. Now that I have my 1 hour support and resistance, I'm going to go to the 15-minute. Look at that. The 15-minute is giving me that microtrend arrow here. And look, right after that, it went up. Whew. It's fire. Now my 15-minute I'm gonna look for, should I look for a resistance or should I look for a support level? Let me know in the chat. Based off where price is currently at, does it make sense to add a support or resistance for my internal zone? Let me know in the chat. Support, right? Because price is currently here, we can use our hourly resistance or my resistance at the 50-minute. It only makes sense to look for a support, right? And we can use this as our resistance at the 50-minute. So your hourly can also correlate with your 50-minute. Okay, so I'm gonna take my horizontal line again. I'm going to draw my support here because we have multiple touches here. You see how it reacted here. It was once a resistance, and then it broke above. We had price action here. It created resistance here, here, and then it finally broke above. So that's a good area for my support. I'm going to take my rectangle. Draw my internal zone. I'm going to color this blue. Tell the difference. The width of my rectangle is 20 pips. 2276 and 2374. My key level is 2375, which is my horizontal line. There you go. Boom. We look closely. Look how it broke and retest. Break above, close, came back to retest, and it wicked. It barely touched my zone there, but it wicked. Came down. And it shot up. This is a break and retest. This happened at 6 o'clock. As soon as I started my call, this candle popped up. But I'm gonna wait. This is my 6:30 candle. My New York Open candle is this bearish candle right now. Okay, so it may come back down to retest again. But I'm gonna be patient because I understand that we have news at the top of the hour and anything can happen. It may continue to the upside and may come back down to retest again before the buy up. And I'm only looking for buys. I'm not looking for sells. I don't want to go against the trend. I'm gonna go with the trend. I'm gonna go with the trend. I'm looking for buys because everything is in buy mode. I'm getting that blue micro trend arrow. All these arrows are blue, so it's giving me buying signs. Okay. And we have the blue micro trend arrow here, and boom, the rest is history. It went up. And we're seeing that break of structure there. Okay. And then in between, I can just mark up my horizontal lines for potential take profits. So 2380. $23.85. My key levels, right, can be either your entry, your stop loss, or your take profits. Okay, you can use these key levels every $5 for gold. This is for gold. Okay, but you can apply this concept to any pair, any asset, but specifically I'm talking to gold. The only difference is price and the way you count pips. Okay. Protein, go with Carlos. But you can use these key levels for potential entries, stop loss, or take profit. All right. But in this case, I'm gonna wait till I get that retest again. It may come back down to retest, or it may continue up. We'll see. But I do want to see price revisit my zone again and wait for a confirmation candle before I take another buy, the upside. Okay. About to hit the 45-minute mark. Let's see here. Look at that, the price momentum, all these, see these blue arrows here? This is indication of price momentum, where price is heading. It's gonna mean more blue arrows than red arrows. That's how you know that price is going to the upside. The price momentum is to the upside. When there's more blue arrows than red arrows, that indicates that price momentum is to the upside. So this may continue to the upside. So we're about to hit the 45-minute mark. I'm gonna go to the 5-minute. I take my trades based off the 5-minute. And we also have liquidity. We have liquidity. This is all liquidity from all the buys. We also have liquidity up here. Okay. At the resistance. We have liquidity down here. And now we have a bullish 1-hour candle. Let's wait and see what will happen. We have the micro pivot here. The micro pivot line, we can use this as a counter trend line. This dashed line right here can be used as a counter trend or break of structure. See how I broke above my micro pivot line? Broke above, wicked, and then shot up. So we could see price continuing to the upside, the 45-minute mark, for a long position here. Stop loss 50 pips. From entry. Kind of light this bad boy up to my next zone. For 1 to 2, risk reward. We just hit the 45-minute mark. I want to see a confirmation candle. We could see price respecting above my 2380 area, or may shoot down to the back to my zone here. I do want to see price coming back to my zone. For 1, 2, 3. Because we have more price action going on here. We have a touch here, slightly a touch here. This is all liquidity. Do you want to see price coming back down before the buy up? It seems like it's gonna shoot up. But we have news in about 13 minutes. Look at the 15-minute. Yeah, the 15-minute is giving me a bullish candle. So it's a good buying sign there. This is a 3 white shoulders. So guys, based off my 15-minute is giving me the 3 white shoulders there. You guys want to enter the buy here, you guys can. Make sure you guys are using proper risk. But this thing is going to shoot up. Damn, look at that. Sheesh. What a push. You guys can take it to up to the zone here for 1 to 2 risk reward. But this thing is going to shoot up. Maybe when you said it could push price to the upside even more. But I'm going to wait and see what happens. I'm going to be patient. I'm going to wait till news to see how price will react. It could liquidate because when there's news, there's going to be liquidity. It's going to be a liquidity sweep. It could push price down and shoot up. Or it may just do something like this, liquidate here, and then shoot up. Right now it's liquidating this high here based off that wick. When you guys see wicks, that's basically liquidity. That's all liquidity. Let me know if you guys have any questions. Is this making sense to you guys? But we had a break of structure here above 2380. I do want to see another retest. See another retest before the buy. I could see a retest here. Or I can come back here and retest. It's your decision to make, Alex. There is news coming, so you could pull out, or you can take partials. Or you can set it at break even. But you know, anything can happen with news. So I will pull out. I'll pull out, just take my profits and just watch what happens with news. With RU. Just be on the safe side. Just take what you already made and just wait until news. You can always catch a re-entry. It's better to collect profits and no profits. You'll never go broke taking profits. So and just wait till news, how price will react, and you can take another entry, another opportunity. So looking bullish right now. We have 8 minutes till news. So ahorita estoy esperando porque tenemos noticias a las 7 en 8 minutos. So sí, ahorita está en compra, pero voy a esperar porque puede pasar lo que sea. El mercado puede ser lo que sea cuando tiene noticias. Puede mover abajo para otro toca aquí para una compra o puede bajar aquí en mi zona para otra compra arriba. Se voy a esperar, voy a hacer paciencia, voy a tener paciencia aquí, porque sí, eso mira bien para una compra, pero va a venir noticias y puede ser lo contrario o puede continuar. Pero yo voy a tener paciencia, voy a esperar después de la noticia a las 7 para mirar una oportunidad. Y ahorita quebró arriba de mi zona de 15 minutos y vuelvo a tocar. Esta es una quebra arriba, retest, boom. Thank you, sis. I'm doing my best. But this thing is shooting up, guys. Wow. Jeez, so we were to enter here, TP2 would have been hit. But this is a good buy. Look at the 15-minute. It's giving me a 15-minute bullish candle, which is good. Now, mind you guys, whenever you guys see an impulsive move like this could be a potential pullback. Okay. We're gonna expect a pullback. And at the pullback, we can catch our potential entry. It's gotta be a retest at some point. But let's see how news comes out. We have 5 minutes left till news. Don't have FOMO because you could have cut the buy here and collected these pips. Guys, remember, patience is key. Being disciplined. Having no FOMO, having no, not being greedy. Yes, we could have cut the buy here, but I'm not entering the buy yet. I'm gonna wait till news. I'm gonna wait after news, but because I understand the news is coming up at 7 Arizona time, 5 minutes. We have Federal Jerome Powell testifying, and anything can happen. And plus, it's a red folder, so it's high impact. but I pretty much just broke down, the market structure here, chart work. We just did some analysis. If you guys got this down, let me know in the chat. I start getting some value. So we have, you guys can see here, we have a big impulsive move on a 15-minute. So probably when you sit, we could see a pullback before the big buy. But let me know in the chat if you guys are getting some value. Let me know. If you guys have any questions, feel free to drop in the chat. It's better to see that like your analysis is on point, like your analysis is going your way, and I'd rather miss a trade than take a trade and end up being a loss. Mhm. When there's news, there's always going to be a liquidity sweep. I'd rather miss a trade than take a trade and end up being a loss. Because I wasn't following my trading plan. I wasn't following rules. I was being greedy, having FOMO. Look, people that are seeing this right now, they probably missed out. They're like, oh, like it's buy mode. I'm into the buy right now. You're rushing into taking a buy right now and not knowing that there's news coming up. That's most traders. Most traders are seeing this and saying, oh, buy, not knowing that there's news coming up in 2 minutes. And they're going to end up being liquidated. You guys remember the video I showed you guys of 3 psychological trading mistakes? Having FOMO is one of them. Don't have FOMO. Fear of missing out. Back stuff. That used to be me too. Happened to me so many times that I would see a good opportunity for a buy because I'd see this happening. I'm like, okay, I'm gonna buy because it's gonna continue up. But then some event happened, news happened, and then I see a pullback. And before the buy, I get liquidated. Because this is all liquidity here. This is all liquidity from all the buys. This is how we grow. Facts, Cisco. We learn. Look at that now. Now we're seeing a bearish candle forming. So imagine if you're into the buy here. You've been in drawdown. See why it's so important to wait? So we have news coming up in less than a minute. It'll go back down to my 2380 or down to my 2375. We have news now. Let's see. News coming back down. When we see a bearish candle like that, it's a reversal candle. That is a reversal candle. The downside. That's why studying the confirmation candles, the candlesticks, so important to learn. Because this is a reversal candle. Please get the book, the Candlestick Trading Bible, and study that. Study the candles. Gives you a lot more information, a lot of data. So now we're seeing a pullback happening because there's news. Yep. It's going down. Young Jock. That's let's look at the 15-minute. Okay. 4. Maybe. Let the trade come to you. So Niset, it is resulting this candle here. For 1 hour. I'm waiting to see the retest down to the downside for the buy. See here, this was 5 o'clock. Gave me this doji candle. New York Open hit. Gave me this bullish candle, the 1 hour. Gave me this wick here. Now it's retesting. It's testing this. There's an area here actually. Retesting, but testing it. When we see a break above, you can see a potential break and retest there above my 2385. 30-minute. Yeah, I do want to see a retest because we had a resistance here and broke above. Should come back down wicked again for the buy up. Or it could go back down to my zone here. So we're 5 minutes into the hour. Five minutes resulting a bearish candle there. I wonder what Paul is saying. What is this right here? Okay. As head of the central bank, which controls short-term interest rates, he has more influence over the nation's currency value than any other person. Trade scrutinize his public engagement as they are often used to draw subtle clues regarding the future monetary policy. What is he saying, though? Oh, there he goes. YouTube video. He's live on YouTube.
Excellent, according to the most recent data from Gallup's Economic Confidence Index. Despite President Biden's gaslighting, inflation was not 9% when he took office. It was out of control. The out of control inflation we're experiencing now is something that this administration did not inherit, but is a product of their policies and their overspending. The nearly $2 trillion partisan and fiscally reckless spending as a part of the American Rescue Plan poured fuel on a smoldering inflationary fire. After a delayed response to runaway inflation, the FOMC has acted with a historic pace of interest rate hikes to ease the pain caused by Democrats' failed economic policies. It is a response, not the actual disease, but the response the Fed is trying to tame these flames, but it's a response to Democrat policies here on Capitol Hill in the administration. So far this year, inflation has been more persistent than many, including the Fed, previously expected. There's still work to be done to reach the Fed's 2% target. As I've repeatedly said, the Fed's, as I repeatedly said, the commitment to independence of the Federal Reserve is of utmost importance, and it is critical, especially in a political year like this. Just as, Chair Powell, just as you did in previous administrations, you must not allow politics to cloud the Fed's monetary policy. However, despite your best efforts, the Fed independence remains at risk. And unfortunately, calls are coming from inside the building. Under Vice Chair Barr, the Fed's regulatory and supervisory agenda has become politicized. Most notably, the development of the Basel III endgame proposal has been a mess. This process has been cloaked in opaque standards and timelines set at meetings of unaccountable global governance bodies. The Fed has promised to process 410 almost universally negative comments, public comments, regarding the unjustified and underutilized initial proposal, or an underanalyzed initial proposal. Recent press reports, which seem to be the only way Congress gets details on the Basel III endgame progress, and your comments yesterday indicate the Fed will finally conduct a long overdue quantitative impact study. That is welcome. And if true, this is a promising development. Chair Powell, the last time you testified before this committee, you stated that the initial Basel III endgame proposal will undergo, quote, broad and material changes, end quote. Yesterday in the Senate, you said the board supports reissuing the updated proposal for public comment. I'm concerned that press reports also claim the Fed will tuck any changes to the proposal into this quantitative impact study. That study, including the substantial changes to the proposal, would then be issued for public feedback with relatively paltry comment period. I'll reiterate to you here what I've said to you in private. Broad and material changes to the Basel III endgame necessitate a full reproposal, full stop, full stop. Failure to do so will result in an immediate Congressional Review Act vote out of this House of Representatives as quickly as we can possibly process it. Now, it doesn't have to be this way, and I think The Fed adhering to its longstanding principles here is highly important, especially with this interagency process. I'll close with this. Your steady and capable apolitical leadership of the Federal Reserve has shepherded our economy through extreme uncertainty. We now find ourselves in the midst of a new type of uncertainty surrounding the leadership of our nation. Doubts, fears, and panic often lead to bad decision-making and even worse policy. I urge you to reject outside political pressure in this volatile time and stay the course for the good of the American people and our economy as a whole. Thank you for your service, and I yield back. I'll now recognize the ranking member of the full committee, Ms. Waters.
Thank you very much, Mr. Chairman. Welcome back to the Honorable Jerome H. Powell, Chairman, Board of Governors of the Federal Reserve System. Chair Powell, as we saw with the latest jobs report, the labor market remains strong and the economy is surging. Despite inheriting an economy from the prior administration that had the worst jobs record since the Great Depression, President Biden has now overseen a record 15.7 million jobs created since he took office, with 206,000 new jobs created just last month. Not only that, but under the Biden administration, we're witnessing low unemployment rates, rising wages, and stabilizing prices for goods and services. This is not only because of President Biden's strong leadership, but also because of the historic legislation signed into law by President Biden, which has resulted in lower costs, created more jobs, rebuilt our infrastructure, supported small businesses, eliminated mostly junk fees, wiped out more than $144 billion in federal student loan debt for 14 million borrowers, and cut child poverty in half. President Biden is and will continue to advance policies that are providing good-paying jobs and an economy that works for everyone. Now, while I'm pleased to see that inflation is declining, the latest data makes clear that housing remains the #1 driver of core inflation. Since 2020, house prices have increased by nearly 50%, with Americans now spending on average over 30% of their income on housing. This is a top priority for Democrats, but remains an afterthought for Republicans. Earlier this Congress, I reintroduced my comprehensive legislation housing package, including the Housing Crisis Response Act. This bill provides more than $150 billion in fair and affordable housing investments, representing the single largest investment in affordable housing in our nation's history. These funds would create nearly 1.4 million affordable and accessible homes, bring down housing costs for all, and revive the American dream of home ownership. Committee Democrats are committed to getting this bill across the finish line and continue to hold out hope that our Republican colleagues will finally join us in this effort. Unfortunately, extreme MAGA Republicans are not just ignoring housing inflation, they're advancing their Project 2025 manifesto that would dismantle U.S. democracy and the economy as we know it today. Project 2025 is authored by almost 24 former Trump White House staffers and Trump administration officials. It was compiled and published by the ultra-far-right Heritage Foundation, whose CEO recently declared that they are, quote, in the process of a second American Revolution, which will be bloodless if the left allows it to be, quote, unquote. And if that kind of talk reminds anyone of the rhetoric we heard in the lead up to and on January 6, 2020, it should. Project 2025 promotes radical ideas to materially undermine the Federal Reserve, if not effectively abolished. MAGA wants to put you out of a job, Chairman Powell, so I look forward to your testimony and hearing from you, a Republican who was first nominated by President Trump, about your thoughts on the importance of the Federal Reserve and the work you have done to help our economy. And I yield back.
Gentleman yields back. A note for the records, Jerome Powell was initially nominated by President Obama to the Board of Governors of the Federal Reserve before being nominated by President Trump to chair. So here we are. We'll recognize the chair of the Financial Institutions Subcommittee, Mr. Barr, the Andy Barr variety, for 1 minute.
Thank you, Mr. Chairman. Welcome, Chairman Powell. Runaway inflation and increased interest rates necessary to confront it continue to hammer Americans, and especially those living paycheck to paycheck. Workers and families feel the pain, making everyday purchases at high prices in the grocery aisles and at the pump. They have suffered years of eroding purchasing power in their paychecks under the Biden administration's economic mismanagement. Heightened mortgage rates make it prohibitive for new home buyers to reach the American dream of a starter home for their family. I am pleased that the Fed is resolute in getting inflation under control. I am pleased that you have committed to an apolitical approach to this. I am not pleased by the Fed's opaque, unjustified, politicized, and underanalyzed regulatory proposals, which will ultimately hurt all Americans. We need to know where the Fed is going on its fundamentally flawed Basel III Endgame proposal and its opaque regulatory approach. I yield.
Well, Chair now recognizes the ranking member of the Financial Institutions and Monetary Policy Subcommittee, Mr. Foster, for 1 minute.
Thank you, Chair McHenry and Ranking Member Waters. I'd like to also thank you, Chair Powell, for joining us today and for the role you have played in combating inflation and supporting a stable economic recovery. While the presidency is often the focus of political pronouncements about macroeconomic conditions, there's no question that that undersells the importance and the independence of the work of the Federal Reserve Board. While actions taken by the President and Congress certainly play a significant role, monetary policy decisions made by an independent Federal Reserve are the big dog in shaping macroeconomic conditions that shape economic outcomes for millions of Americans. And work continues on inflation, but significant progress has been made to bring the country in line with the Fed's 2% target. The good news is that macroeconomic policy is working as designed. Well-calibrated monetary policy with fiscal support from the American Rescue Plan, the Infrastructure and Jobs Act, and the CHIPS and Science Act has powered strong job creation and low unemployment while staving off a recession that many thought inevitable, and far better, I should point out, than our peer countries. While Democrats are committed to supporting your efforts to cut costs for American families, I yield back.
We'll now welcome the testimony of Jerome Powell, the 16th chair of the Federal Reserve Board of Governors. Chair Powell, you'll be recognized for 5 minutes to give an oral presentation or testimony. Without objection, your written statement will be made a part of the record. You're now recognized for 5 minutes.
Chairman McHenry, Ranking Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Federal Reserve's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We've also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators suggests that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still at a low level of 4.1% in June. Payroll job gains averaged 222,000 jobs per month in the first half of the year. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25 to 54, and a strong pace of immigration. As a result, the jobs to workers gap is well down from its peak and now stands just a bit above its 2019 level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the committee's longer-run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in May. Core PCE prices, which exclude the volatile food and energy categories, also increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee has maintained the target range for the federal funds rate at 5.25% to 5.5% since last July, after having tightened the stance of monetary policy significantly over the previous year and a half. We have also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. Our restrictive monetary policy stance is helping to bring demand and supply into better balance and to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Fed with the operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and price stability. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Well, thank you, Chair Powell. I'll now recognize myself for 5 minutes. Chair Powell, let's begin with this question of the Basel III endgame. I know you had questions about it yesterday, but I think we need further clarity. Your testimony about Vice Chair Barr's discussions with the FDIC and with the OCC on the next steps for the Basel III endgame. You mentioned potential changes have been made to the original Basel III endgame, that a lot of progress has been made, and that the board is very close to agreeing on the substance of those changes. But the next steps, that's really what I want to get into. Let's get through the mechanics of what happens next. If the Fed, the OCC, and the FDIC agree on the substance of whatever changes you're going to make, what happens then? Like, walk through the mechanics as you anticipated.
Okay, so we're very close to having exactly that agreement on the substance of the proposed changes pursuant to those talks. The next question then is how to proceed. And you know, it is my view and the strong view of a number of board members that the appropriate thing to do is to take that new proposal and publish it along with the effects of the quantitative impact survey and put that out for comment again and receive comment on that and then take some time to review those comments before finalizing the regulation. And that's a discussion we're having with the other two agencies now. We have not been able to reach agreement on a path to do that, but that's something that we think is the right way to do. That's what we've done in similar situations. There aren't that many similar situations, but when we see broad and material changes to an important regulation, we think let's go out again and give all the commenters another chance to comment.
Yeah, and that also avoids serious lawsuit risk and the risk that Congress step in and overturn this rulemaking using the Congressional Review Act. I think the other agencies here, if they're not agreeing with the Fed, they're running against the independence of the Federal Reserve here. This is not a trifling matter of policy. This is a matter of real substance for the independence of the Fed and rulemaking at the Federal Reserve, which I think we should be able to keep keep the independence of the Fed separate, especially in this political environment. But opening up to a new comment period, so that means you have to get consensus for the Board of Governors on the policy. You have to get the agreement of the scandal-plagued chair of the FDIC or the 5-member board of the FDIC. You have to get agreement by the acting comptroller of the currency. These people should not have real standing with the Fed on a matter of serious policy, especially with a chair of the FDIC that is being ousted by his own party as soon as they can get a replacement confirmed. It's an absurd thing that the Fed has to go to an acting comptroller of the currency and a guy who's going to be out of a job very soon at the FDIC and get agreement. But thank you for listening. That was more of to convey this. So the quantitative impact analysis, is this going to include the interplay with the stress tests, GSIB surcharge, all the other capital charges here? Will that be a part of the quantitative impact analysis?
It'll be this proposal, which does include changes to the GSIB surcharge, but does not include the stress tests.
Okay. But the goal here with the quantitative impact is to actually measure the impact of these rules as enacted, right? Based upon what is existing regulatory structures. Okay.
That's right. Yeah.
All right, so let's get into the question of balance sheet as quickly as we can. 2.5 years ago, you stated, quote, the committee intends to slow and then stop the decline in the size of the balance sheet when reserve balances are somewhat above the level it judges to be consistent with ample reserves. That's 2.5 years ago. Where are we in this question of what are ample reserves?
Well, so the balance sheet, the runoff in the portfolio is now, I think, $1.7 trillion so far. So we've made quite a lot of progress. We think we have a good ways to go, and as I mentioned, and as you just mentioned, we've now slowed the pace, really with a view to getting as far as we can without creating frictions and disruption that might cause us to prematurely stop shrinking. Going a little bit slower might actually enable us to go further. We think we have quite a ways to go. It's very hard to be precise about it. It's really a question of supply and demand, and we'll find that level with a little bit of a buffer on top of it, and that's where we'll stop.
All right, thank you for your testimony. The ranking member, Ms. Waters, recognized for 5 minutes.
Thank you very much. Chairman Powell, are you familiar with Project 2025?
Not really, no.
You've heard about it?
I really don't focus on these things at all. I mean,
You don't focus, but you know there's something known as a Project 2025? The reason I'm asking you is because one proposal is to get rid of the Fed's dual mandate to promote only stable prices, but also maximum employment. This is your mandate. These are mandates, right? This is what you do. Is that right?
We do serve a dual mandate, that's right.
And so if there was anything that would get rid of the mandate, what would it do to our economy? What would it do to our country?
So the question of which mandate we serve is very much a question for Congress. My own view has been that the dual mandate has served us well. This is something Congress can change and change back to a single mandate.
What do you do to get maximum employment? What do you do?
Well, we have one tool on the economy, and that is we raise and lower interest rates. You'll find, though, that, anyway, we certainly at the Fed do believe that the dual mandate has been a good thing, and it's enabled us to, it has not stopped us from controlling inflation when that was the thing that needed to be done.
And so while, of course, I understand you may not have seen, heard, or read Project 2025, are you familiar with an effort in the country to get rid of diversity and inclusion?
I see these things mentioned, but honestly, we're pretty focused on our task, which is maximum employment, price stability. We're strong supporters of diversity at the Fed, as you know.
Are you aware that I created a subcommittee on diversity and employment in this committee?
Yes, I remember that.
And do you think that getting rid of diversity and inclusion interferes with your ability to really realize the mandate of maximum employment?
I spent most of my career in the private sector, and what I observed was really successful institutions in the United States, companies, organizations generally, are those that do a really good job on diversity and get the best out of people and attract a broad, diverse range of talents to the table, and people feel comfortable speaking. So that's the way we feel about it at the Fed, and that's what we've been doing and will continue to do.
And do you think it's important not only to have diversity and inclusion in the public sector, but in the private sector also?
Yes, and as I mentioned, if you look at very successful American companies, you will very often see that they're good at that. They're good at hiring, attracting, investing in, and keeping diverse talent. That's one of the things that our really good U.S. public companies do well.
Have you seen improvement during your tenure where diversity and inclusion has created opportunities for more jobs and helped to reduce the unemployment rate?
Certainly seen, I think you see over the course of my long career, a big change in diversity and inclusion. And you see that in the private sector and the public sector, and I think that's generally progress. I do.
Under the work of this committee, and the subcommittee is chaired by Ms. Beatty, she was able to gather important data about what was going on in the private sector. And what she discovered was that many of the CEOs and others welcomed the opportunity to learn more and to do better and to get assistance. And we saw improvement with diversity and inclusion. Have you seen that?
There's no question, if you talk to CEOs, they get this. If you want to attract the best talent in our country now, you need to be committed to these things.
And so I would like to compliment you on the job that you have been doing. I'd like to compliment you on keeping us informed about inflation. Not only do I welcome you here today, I look forward to working with you for years to come. I yield back. Thank you.
Thank you.
The gentleman from Arkansas, the vice chair of the full committee, Mr. Hill, is now recognized for 5 minutes.
Thank the Chair. Chair Powell, thanks so much and welcome back to the committee. I want to pick up where Senator Tim Scott and Chair McHenry left off and reiterate my strong support for your comment yesterday in the Senate about the need to repropose the Basel III endgame. The Supreme Court's precedent, I think, makes clear that if a rule undergoes broad and material changes from the proposal to final rule, the public must be given a meaningful opportunity to review and comment on those changes. You generally share that view, I think. Is that right?
Yes.
And I'm looking forward to seeing the results of the quantitative impact study and the separate comment period, as well as an interagency agreement you referenced yesterday. Because of Dodd-Frank's role and the vice chair for supervision, Vice Chairman Barr's role and the Fed's role, would it be fair to say the Fed is a first among equals on proposing a rule like this? In other words, does the Fed have a supremacy position on determining whether it should be fully reproposed or not, or do you view it strictly as a collaborative basis? Just curious in your view on that.
I would say it's strictly collaborative, and I would say that our discussions with the FDIC, which Vice Chair Barr has actually been conducting, and the OCC, they've been very productive so far. So I want to make sure to say that we've continued to work our way through this, and I believe we will get fairly soon to a resolution of the remaining process issue.
Good. Well, let me turn from that subject to the court's recent decision to overturn the so-called Chevron doctrine. Many of us believe this was the first step to reining in decades, literally, of an unprecedented, uncontrolled growth in the administrative state. And so I think all of us on at least this side of the aisle are certainly saying to the Federal Reserve and other federal agencies in our jurisdiction that we want to reassert Article I authority over the direction that
All right, guys. So that's enough of that. They're really putting him on the spot, and right now, it's seeming that's positive, and they're it's mentioning positive keys, that their target rate to bring down inflation is still there. And they're just asking these bunch of questions that happened in the past, but how she said that, Project 2025, that's something I'm going to dive into to look into what the project is about. So Project 2025 is something I'm going to definitely do more research on. I don't want to speak too much about it because I barely know anything about that. So that's something I'm going to look into. But she's saying that I'm looking forward to working with you the next coming years. I'm like, well, okay, I thought they're going to remove him as a Federal Reserve chairman. They're talking about how they're going to remove him from the office, but now they're saying they're going to keep him. So that's good news. For the dollar, but I'm definitely going to do more research on that. And right now we're seeing a retest back to our zone here, and just wait for the confirmation candle, wait for for the confirmation candle to line up in all your confirmations. This is a break and retest. So I'm waiting for that bullish candle to form here. When it hits, wait for that bullish candle and just go based off market structure at this point. Just go based off market structure before you take a buy. We are still seeing a buy microtrend arrow at the 4 hours, so we're still bullish. We're still on the uptrend. Right now, we're just experiencing that pullback temporarily. So we do have price action going on here. So this could be a potential buy. And right now we have that red strength arrow because we're experiencing a pullback. So whenever you guys see a red strength arrow and you see a blue trend arrow, that just simply means that it's experiencing a pullback. Okay. So don't be confused that, whether are we still in a buy, we're still in a sell trend, we're still on an uptrend, it's just experiencing a pullback. That's basically what it means. Okay. So that's what we have going on. But I appreciate you guys for hopping on and for learning here with me, for studying, and for keep showing up. So this could be a potential buy entry. I'll keep you guys posted in the chat. So pay attention to the Telegram chat, to the Telegram channel for updates on this trade. And I hope you guys have a blessed day. Let me know. Let's see. It's actually touching that area there. So yeah, guys, trade at your own risk. Wait for the confirmation candle. Wait for that bullish candle. If it breaks below, then the trade is invalid. If it breaks and closes below my zone, the trade is invalid. Just look for the next structure, for the next support. But I am still bullish on this. Okay. So wait for that confirmation candle. Be patient. Trade at your own risk. Make sure you set up a stop loss. I'll keep you guys posted in the chat. But I'm out. See you guys tomorrow morning for another big day. Let's go, let's go, let's go.